Hello, I'm Holden Ramey with the CattleFax Closing Bell. Today's Closing Bell is sponsored by Purina Animal Nutrition, LLC. The USDA released the June acreage report this past Tuesday, and for the most part, there weren't many surprises. Both corn and soybean acres came in mostly in line with industry expectations. However, one surprise within the report came in the form of the wheat acreage number. Wheat acres in the current crop year were printed at 42.7 million acres. This was below the industry average estimate at 43.8 million acres and over a million acres smaller than what was published in the March Prospective Plantings report. Wheat acres have now fallen to around the smallest levels in history. Assuming yield and usage levels consistent with what was published in the June WASDE, wheat stocks to use are at risk of falling. Dry and warm conditions throughout much of the winter and spring are taking its toll on the smaller crop as well. The crop condition index has trended lower basically every week over the course of the spring growing season. This past week, the index was running around 53, which would be at its lowest level in over 30 years. The index is based off USDA crop conditions, which this week had 47% of the crop rated poor to very poor. Fewer acres and tough conditions should offer fairly solid support to the wheat complex. Over the past 5 weeks, Chicago's September wheat contract has established solid support near $5.90 a bushel. This week, September wheat gained around 10 cents and is slated to close around $6 a bushel. Given the previously discussed fundamental factors, upside potential initially to 6.25 should not be ruled out. Turning to other markets this week, moderate trade occurred in the north at 255 to 256 live and 403 dressed. The live trade was primarily $4 to $5 softer, while the dress trade was mostly $5 lower. Moderate to active trade occurred in the south at mostly 255, $3 lower week over week. The feeder cattle index was quoted Wednesday just under 377, a decline of around $3.50 on the week. December corn continued to work to establish support around $4.35 a bushel. The contract is slated to close around $4.42, up a penny on the week. From all of us at CattleFax, we hope you have a safe and happy 4th of July. And as always, thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.